What is passive income? It could be your key to financial freedom. What is passive income? Passive income refers to earnings generated with minimal active involvement or effort from the individual receiving the income. Unlike active income, where you exchange time and effort for money through a job or service, passive income allows you to make money on an ongoing basis with little to no direct daily involvement. Passive income streams are designed to provide a consistent flow of revenue without requiring constant attention or active participation once they are set up. However, this doesn't mean they require no effort at all. Initial effort, time, and often money are usually needed to establish and maintain these income streams. When it comes to building wealth and planning for the future, one important strategy is creating a revenue stream that is mostly hands-off. This is called passive income, and it has the potential to completely transform your personal finances. The difference between passive versus active income. Active income. Active income is earned through direct participation in a job, trade, or business. It requires active involvement, time, and effort to generate this type of income. When you perform a service or provide a product and receive compensation in return, it's considered active income. Examples of active income sources include salary, income earned from a job or employment; wages, payments for hourly work or tasks completed; commission, earnings based on sales or deals made; business income, revenue from a business where the individual is directly involved in operations. In active income, you trade your time and skills for money. Passive income. Passive income is earned with minimal effort or involvement after initial investment of time, money, or resources. Once set up, it generates income without requiring continuous active participation. Passive income sources can continue to generate revenue even when you're not actively working. Examples of passive income sources include rental income, earnings for renting out property or real estate; dividends and investments, profits from investments in stocks, bonds, or mutual funds; royalties, payments for using intellectual property like books, music, or patents; affiliate marketing, earnings from promoting products or services online. Passive income streams typically require upfront work and investment, but can provide ongoing returns without constant involvement. How to begin earning passive income? Once you recognize the power of passive income and the impact it can have on your finances, you'll probably want to know how and how quickly you can begin earning it. You'll want to first take a look at where you stand financially so you can decide where exactly to start. This means determining a few things. 1. Decide how much money you have to work with. Do you only have a few $100s to put away? Or a significant nest egg? Or have you recently come into a massive windfall of money you want to optimize? The amount you have available to save or invest can dictate where you first focus your efforts. For example, if you have $100 to start with, a high-yield savings account with no minimum balance may be the easiest place to put it. Many bank accounts have a $0 minimum deposit amount and still allow your money to grow safely. If you have $10,000 to invest, however, you may want to consider whether crowdfunding, real estate, or P2P lending could provide you with better passive income returns. 2. Consider how accessible you need your funds to be. The way you approach your passive income strategy depends largely on whether your investable funds are already earmarked. You might want to find a way to earn on your emergency fund, for instance, but that money must remain accessible in case something happens. In this case, a no-penalty CD or high-yield savings account might be the right answer. However, if you already have adequate, liquid savings, you may want to set your sights on another passive income venture, such as bond index funds or REITs. 3. Consider if you have the time for some effort. Owning rental property can be very lucrative, but it does involve a fair amount of effort over time. Whether you self-manage your renters or pay a management company to do so, you'll need to be available for questions and to foot the bill for large repairs. It's important to decide whether you're willing to take that on. Conversely, some passive income streams, such as online courses and ebooks, take a set-it-and-forget-it approach. You put in the effort up front and then, for the most part, sit back as the income rolls in. Being a blogger and making money off Google Ads or affiliate marketing might fall somewhere in between. It's important to decide where you fall in that willingness of effort spectrum. 4. Ask yourself what you have to offer that others will pay for. If you want to create a recurring product or service that others will spend their hard-earned money on, you need to first determine what you have to offer. Think about your acquired knowledge, experiences, and skills. Can you compile and present any of that in a way that buyers would find helpful? If so, you may have found your answer. This category of passive income includes things like online courses, ebooks, digital products, templates, photography presets, etc., printables, worksheets, planners, etc. You'll need to put in the initial investment of time and money to get the product ready for launch, and it may need occasional updating and marketing. For the most part, though, this is a very passive source of income. 5. Think about your passive income's purpose. In strategizing your passive income efforts, it's important to spend some time thinking about the why. Are you interested in developing passive income streams as a way of reaching your financial freedom goals? Do you want to make an extra $1,000 each month, or are you hoping to retire early on passive income alone? Do your financial goals have a timeline? How you answer these questions may guide your path forward. If you're hoping to join the F.I.R.E movement, financial independence, retire early, and retire by 35 on just your passive revenue, you'll probably need to take a much more aggressive approach. If your goal is to create steady growth to build funds for a more traditional retirement, you may choose to focus your efforts in different places. And if you simply want your money to safely grow while it's not being used, there are options for you too. A few things to know about passive income and taxes. When you hear the phrase taxable income, you probably first think of your paycheck. However, the Internal Revenue Service, IRS, won't forget about your alternative income streams just because you aren't actively working to earn them each month. How your passive income is taxed depends on where and how it's earned. Some may be considered ordinary taxable income, such as the sales from an online e-course or interest payments received from a peer-to-peer loan. This means it will factor into your adjusted gross income, AGI, and taxes will be calculated based on the income bracket in which you fall. On the other hand, taxes may be calculated differently for money earned in a savings account, on dividends received throughout the year, or in the form of capital gains. In some cases, you may be required to make estimated tax payments throughout the year for the taxable interest you're receiving. Depending on where you live and what you invest in, you may be exempt from certain state and federal taxes on your passive income. Certain categories of income are taxed at lower rates than ordinary earned income as well. The safest approach is to consult with a financial advisor or tax professional if you want to learn more. That way, you can make informed decisions about your tax planning and future investments, as well as ensure you are paying taxes correctly for both your active and passive income streams. Don't forget to like, subscribe, and hit the notification bell for more content like this.